Hello students, in this video I will try to show you more accounting equations related with different transactions. Now this is the question that we have. Mohit has the following transactions. Prepare accounting equations. Now with the help of all these transactions from A to F, I have to prepare accounting equations related to them. So before I prepare the accounting equations, let me identify the accounts which will get affected in each transaction so that it will help me to identify exactly how many assets account I will need to open and how many liabilities account I need to open. I have done it, and this is the accounts that will get affected. Now let me talk about the first transaction. Number A, business started with cash. Now in this transaction, the two accounts that will get affected will be cash account and capital account. Number B, purchase goods from Rohit. Now here the business is purchasing goods from Rohit. This is a credit transaction because the name Rohit is mentioned and the transaction is not clear about whether it is cash or credit. So since the name is mentioned, it is a credit transaction. In this case, the two accounts that will get affected will be stock account, which represents goods account, and the other account will be creditors account, since Rohit is a creditor of the organization. Then number C, sold goods on credit to Manish. Now this transaction also is a credit transaction, but here Manish has bought goods from the business. So Manish is a debtor because he did not pay the amount for the purchases he has made from the business. So Manish is the debtor for the business. So the debtors account will be affected, and goods were sold. So in that case, goods are going out from the business. So the stock account, which represents the goods account, will get affected. And also we can see here the goods which were sold were costing rupees 17,500, but it was sold to Manish at 20,000 rupees. So there is a profit here. So if there is any profit, the capital account will get affected. So the three accounts that will get affected are stock account, debtors account, and capital account. Number D, cash paid to Rohit in full settlement. Now the word full settlement is used. So if we look at the transaction number B, this has a relation with transaction number D. Now if we look at B, the business has purchased goods from Rohit, and the total amount which was payable to Rohit by the business was 50,000 rupees. But here when the cash was paid to Rohit, the payment which was made was 48,500. So after making the payment of 48,500, Rohit accepted this amount and the account was fully settled. The business did not pay full 50,000 rupees. It paid only 48,500 in cash. So in that case, because the business is paying cash to Rohit, the cash account will be affected in this transaction, and Rohit is the creditor. Even the creditor's account will get affected. On the other hand, we can see the full amount was not paid and the account was settled. That means the business does not have to pay the full amount. It got a discount from Rohit, a cash discount which we call it. It got a cash discount of 1,500. So it is a gain or a benefit for the business. So if there is any benefit or gain for the business, it will affect the capital account. So the three accounts that will get affected in this transaction is cash account, creditors account, and capital account. Number E, cash received from Manish. Now cash is being received from Manish. Manish is the debtor who is paying cash to the business. So the business is receiving cash. So the cash account will get affected here. And Manish is the debtor. So even debtor's account will get affected in this transaction. Number F, cash withdrew for personal use. Here the owner is withdrawing cash from the business. So cash will decrease from the business. So cash will get affected here. And whenever an owner withdraws anything from the business, it will always decrease the capital. So the capital account will always get affected. Anytime when the owner withdraws anything from the business for his personal use, it will always affect the capital. The capital will decrease, and the asset or anything which is withdrawn from the business, even that item also will decrease from the business. So here the owner is withdrawing cash, so the cash account will get affected here. Now if we look at all the accounts that are affected in each transactions, we find that we have to open cash account, stock account, and debtors account. These are the assets account which are affected in after looking at all the transactions. Now liabilities, we have to open creditors account and the capital account. So let me start with the first transaction. I will explain them in detail and I will show you how to put the effect in the accounting equation. Now the first transaction is business started with cash. Here, if we look from the business point of view, whenever we record, we will look from the business point of view. If we look from the business point of view, the owner is bringing cash into the business. So the cash is increasing in the business. So the asset, cash is an asset, and asset increases in the form of cash by 1,75,000 in the business. So the cash account will get affected here, and asset will increase in the form of cash by 1,75,000. And also the business will record the capital. It will increase the capital. A capital account is the representation of the owner's account. The business will increase the capital by 1,75,000 in this transaction. So the effect of this transaction on the accounting equation will be like this. We will write the format, we will draw the format. Then after drawing the format, we will open the cash account, the stock account, the debtors account, the creditors account, and the capital account, which we have already identified. So after that, we will write serial number A, started business with cash. The amount of cash we will increase by 1,75,000 because the business is receiving cash as the owner has brought this as an investment in the business. And also the business will increase the capital because the owner is bringing capital into the business. So capital is also increasing, and the capital will increase by 1,75,000. So our new equation will be, so this is our new equation. Cash will increase by 1,75,000 after this transaction. Stock is not affected, it will be 0. Debtors is not affected, so it will be 0. Creditors is not affected, so it will be 0. So capital will be increased by 1,75,000 after this transaction. So this is our new equation. If we look at both the side has a total of 1,75,000. That means the asset side is 1,75,000, and the liability side, that is liabilities plus capital, will also give us 1,75,000. So we can go for the next transaction. The next transaction says purchase goods from Rohit, rupees 45,000. Sorry, rupees 50,000. Now, the goods were purchased from Rohit, and the amount involved here is 50,000 rupees. In this case, the transaction is not clear whether it is a cash or a credit transaction. So we will look at the name, whether the name is given or not. So yes, the name is given here. The name is given as Rohit. The goods were purchased from Rohit. It can be the name of a firm, or it can be the name of a person from whom the goods were purchased by the business. So if the name is mentioned, then we assume that it is a credit transaction. If the name is not mentioned and the transaction is not clear whether it is a cash or credit, then we assume that it is a cash transaction. But here the name is given, so this transaction is a credit transaction. That means the business has not paid to Rohit rupees 50,000 for the goods which the business has purchased. In this case, Rohit is a creditor, so the creditor's account will get affected, and this is a liability. Since the amount is not paid, so the liability will increase in the business in the form of creditors by 50,000 rupees. On the other hand, the goods, when we look from the business point of view, the goods are coming into the business, so the stocks are increasing. Stock is an asset, so asset will increase by 50,000 rupees in the form of stock. So in this transaction, the effect will be like this. Stock will increase by 50,000, and even creditors also will increase by 50,000 rupees in the accounting equation. So let me show you in the accounting equation how we will place this. We will write serial number B, purchase goods from Rohit. Now we will increase stock by 50,000 rupees. We will also increase creditors by 50,000 rupees. So we will have our new equation as, our new equation will be, new equation, we have cash balance will be 1,75,000, remains same. Then the stock will increase by 50,000 rupees. That is not affected, so it will be 0. On the other hand, creditors remain same. Creditors will increase by 50,000 rupees. Then the capital will remain same as 1,75,000 rupees. Now if we add if we look at the asset side and the liability side, the amount, if we total it, we get the same amount. So we can go for the next transaction. Now our next transaction says C. Sold goods to Manish on credit rupees 20,000. Now in this transaction we can see the goods which were sold to Manish was costing rupees 17,500 and it was sold to Manish at rupees 20,000. So there is a profit here. So whenever there is a profit in a transaction, it will always affect the capital. It will always increase the capital. So the profit here is 2,500. The capital will increase by 2,500 in the accounting equation. Now here the other two accounts, Manish, the goods were sold to Manish. Now Manish has not paid the money to the business. So Manish becomes a debtor for the business and this account will get affected. Manish is a debtor and it is an asset for the business. So the asset will increase in the form of debtors. And since Manish has to pay 20,000 to the business, so the debtors will increase by 20,000 rupees. So I hope you are clear that if there is a profit here, so the capital will get affected and it will increase by 2,500 because there is a profit in this transaction of 2,500. On the other hand, Manish is a debtor. He has to pay 20,000. So the debtors will increase because Manish did not pay this amount to the business. So the business will be receiving this amount. So Manish at present will become a debtor and the debtors will increase by 20,000 rupees with the amount payable. On the other hand, the goods were sold, so the stock account also will get affected because the goods are going out from the business and this is an asset, it will decrease. But we should be careful here that we should decrease the stock not with the selling price but with the cost price. When the goods were purchased for selling in a business, it was recorded at the cost price. That means when these goods when it was purchased before by the business, before selling it to Manish, they were purchased at a cost of 17,500 and the stock was increased by 17,500. So when the goods are sold, that time also the stock will decrease with the cost price and not with the selling price. So we should always decrease the stock with the cost price and not with the selling price. So here the stock will decrease by 17,500 and not by 20,000. So here in this transaction, the effect that we have to give in the accounting equation will be stock will decrease. It is an asset. It will decrease by 17,500 with that is the cost price of the goods. Then the debtors will increase in this business. It is an asset and it will increase in the business and the amount that will increase will be 20,000 rupees because the debtor has to pay 20,000 rupees to the business. And the capital also will increase because there is a profit in this transaction. So the profit here is 2,500. So the capital will increase by 2,500. So let me show you the effect in the accounting equation. So we will write C, sold goods on credit to Manish, and under stock we will decrease because goods are going out of the business and it is decreasing by 17,500. It is the cost of the goods. Then debtors will be increased by 20,000 because the debtors have to pay 20,000 rupees because the goods were sold at 20,000 rupees and there is a profit of 2,500, so the capital will increase by 2,500. So our new equation will be, so this is our new equation. We will have cash balance will remain same as 1,75,000. Then we had a stock of 50,000 before. Now the stock has decreased and it has decreased by 17,500 after this transaction. So our balance of stock will be 32,500. The debtors will be increased by 20,000 and the creditors remain same as 50,000 and the capital will increase from 1,75,000 to it will increase by 2,500. So the total will come to the balance will come to 1,77,500. Now if we add all the assets and if we add the liabilities and the capital, we find that both the side will be same. So we can go to the next transaction. Now the next transaction is D, paid cash to Rohit in full settlement 48,500. Now this transaction has a relation with the previous transaction. that is the previous transaction was transaction B. So let us compare the previous transaction and this transaction so that you understand it more better. So here when we see the previous transaction was purchase goods from Rohit, 50,000 rupees. Now this transaction D says paid cash to Rohit in full settlement rupees 48,500. So before the business organization, this organization has purchased goods from Rohit at the price which was payable to Rohit was 50,000. So Rohit was a creditor of 50,000. But in D it says that the business has paid cash 48,500. So and the account was settled. That means Rohit accepted 48,500 and he accepted that he will not like the account will be settled by receiving this amount of 48,500. That means the business does not have to pay 1,500 to Rohit because the account is settled. So there is no balance left for payment to Rohit. So if we look number D, the account that will get affected here will be there is a discount, cash discount given by Rohit to the business. And the discount is 1,500, which is a gain or a benefit for the business. So the capital will be affected here. Whenever there is a gain or a profit or a benefit, it will always affect the capital in accounting equation. We will increase it. The benefit here is 1,500 because the business has received a cash discount from Rohit of 1,500. So it will increase by 1,500 the capital, and then Rohit is the creditor here. So Rohit is receiving the cash and the account is settled. So the creditor was recorded before when the goods were purchased. Rohit was recorded at 50,000 rupees. Since the account is fully settled, the actual payment which was supposed to be made to Rohit was 50,000. So since the account is fully settled, so we will decrease the creditor with 50,000 rupees as there is no balance left to be paid. So there is no more balance. That means we have to decrease Rohit with the full amount of 50,000 rupees, not with the amount like the of cash payment, that is 48,500, but we have to decrease Rohit with 50,000 rupees as the account is fully settled. So there is no more balance left. So we will decrease the creditor by 50,000 rupees. On the other hand, the cash is also affected. The cash will decrease from the business as the business is paying cash. Cash is going out. The cash amount is 48,500. The cash will decrease by 48,500 because the actual cash payment is 48,500. So the three accounts that will get affected in this transaction will be cash account. Cash is an asset account. The asset will decrease by 48,500 in the form of cash as it goes out of the business. The creditors will decrease by 50,000 rupees because the account is fully settled and there is no more balance left to be paid to the creditors. So the actual creditors is 50,000 rupees. So the whole 50,000 rupees has to be uh, decreased. Again, capital will increase by 1,500 as it is a cash discount received from Rohit and it is a benefit for the organization. So the capital will increase. Before I show you the accounting equation for this, I will show you one more example. Suppose if the question says that paid cash to Rohit and it does not mention full settlement, the word full settlement is not given, then in that case we should understand that the cash payment suppose made was 48,500. Then in such a transaction there will be only two accounts that will get affected. That will be the cash account and the creditors account. The capital account will not be required in this case as there will be a balance to be paid. If the account is not fully settled, then we will have to decrease the creditor by 48,500 as the payment of cash was 48,500 and we won't decrease the creditor by 50,000 rupees. We will decrease the creditor by 48,500 as the account is not fully settled. So in that case, there will be a balance after this. There will be a balance of 1,500 which will be paid. We will decrease the creditor by 48,500 and then there will be a balance of 1,500 to be paid in future. So if the account is not fully settled, then there will still be a balance of creditors of 1,500. So the effect of if we have to show it in the accounting equation, if the transaction says that paid cash to Rohit rupees 48,500 and they don't mention the word fully settled, then in that case the effect will be cash will decrease by 48,500 and the creditors also will decrease by 48,500. But that is not the case here. Here the account is fully settled, so what we will do is cash will decrease by 48,500. Creditors, because the account is fully settled, so we will decrease the full amount as no more balance left to be paid to the creditors, so it will decrease by 50,000 rupees. And there is a benefit here as a cash discount, so the capital will increase by 1,500 rupees. So let me show you the effect. Now number D, cash paid to Rohit in full settlement. Now here we have cash decreases by 48,500. Creditors we have to decrease by 50,000 rupees as the account is fully settled, and the capital we have to decrease it by we have to increase it by 1,500 as there is a cash discount which is received. So the new equation is, we have the cash balance. Before it was opening balance was 1,75,000, but after this transaction there is a decrease of 48,500, so the balance of cash now will be 1,26,500. Stock will remain same as 32,500 balance. Debtors will remain same as 20,000 balance. Creditors, before it was 50,000, now it has decreased by 50,000, so there is no more balance left for creditor. Then the capital, which was 1,77,500, there is a benefit here of 1,500 in the form of cash discount received, so it will increase by 1,500, so the balance will be 1,79,000. Now if we add 1,26,500 and 132,500 and 20,000, we get a total of 1,79,000. And if we check on the liability side, that is liabilities plus capital, also will give us 1,79,000. so both the side are same, so there is no there's nothing wrong here, so we will just go for the next transaction. The next transaction says cash received from Manish. Manish is the debtor. He is paying cash to the business. So the effect from the business point of view, if you see, the business is receiving cash from Manish, so cash will increase. It is an asset and it is increasing by 20,000 rupees. So asset will increase in the form of cash by 20,000 rupees. On the other hand, the debtors will decrease because Manish is the debtor and he is paying 20,000 rupees, so the debtors will decrease from the business. So debtors are assets for the business, so assets will decrease in the form of debtors by 20,000 rupees. So the effect in the accounting equation will be cash will increase by 20,000 and debtors will decrease by 20,000 after this transaction. So number E, we have cash received from Manish. So the business is receiving cash, cash is increasing. On the other hand, the debtors have paid, so the debtors have to be removed by 20,000 rupees. That means the debtors have to be decreased by 20,000 rupees. So the new equation will be, we have new equation, the cash will increase from 1,26,500, it will increase by 20,000, so the new balance of cash will be 1,46,500. Stock will remain same as 32,500, and debtors, before it was 20,000, now it has decreased by 20,000 rupees after the payment, so there will be no more balance left for debtors, so the debtors will become 0. Creditors is 0, it will remain same, and the capital also will remain same as 1,79,000. If we look at both the side gives a total of 1,79,000. Asset side 1,79,000 by adding all the assets, and the capital plus liability also gives us 1,79,000. So we can go for the next transaction. Now in the next transaction, we have withdrew cash for personal use. So the owner is drawing cash from the business for his own use. So whenever the owner draws anything for his personal use from the business, that particular asset will always decrease. Suppose if the owner is drawing goods, then the stock account will decrease. Suppose if the owner is drawing furniture, then furniture will decrease. So whichever assets which the owner is drawing, that particular asset will always decrease. And also if he is drawing it for his own personal use, the capital also will decrease. So here the owner is drawing cash. So when we are recording it from the business point of view, if you see, we will have to decrease cash, as cash is going out of the business and cash is an asset. So asset will decrease by 3,000 in the form of cash. And also because the owner is drawing for his personal use, the capital also will decrease. The capital will decrease by 3,000 rupees. So after this transaction, the effect will be cash will decrease by 3,000 rupees and capital will decrease by 3,000 rupees. So we can give the effect in the accounting equation. Number F, withdrew cash for personal use. We are decreasing cash by 3,000 rupees as cash is going out of the business, and also the owner's capital also will decrease by 3,000 rupees because he is drawing for his personal use. So our final equation, because this is our last transaction, so our final equation will be the cash balance was, before it was 1,46,500. It has decreased by 3,000 rupees. So our new balance will be 1,43,500. And for stock, we have the same balance as 32,500. Debtors 0, creditors 0, and the capital is 1,76,000. Now if we add 1,43,500 and 32,500, the total comes to 1,76,000. So that is the total of the assets. And if we add if we see towards the liability side, if we add the liabilities plus capital, that also gives us 1,76,000. So we have assets equal to 1,76,000 and liabilities equal to 1,76,000 in the final equation. So I hope you have understood how we have solved, and I hope this video has helped you to learn more transactions related to accounting equation. Thank you.